Здравейте на всички участници тази вечер на днешния вебинар. Темата днес ще бъде Brexit Trades или търговията Brexit. Както знаете, на 23 юни 2016 година Обединеното кралство ще вземе едно от най-важните решения в икономическата и политическата си история. Решение, от което зависи дали кралството ще остане или ще напусне Европейския съюз. Ще бъдем ли свидетели на Брексит? Какви сценарии подготвят професионалистите и как всъщност можем да се възползваме от търговията Брексит? Малте Кауб, който живее и работи в продължение на повече от 10 години в Лондон, ще ни даде тази вечер задълбочен анализ как професионалните трейдъри се подготвят за това уникално събитие. Давам думата сега на днешния референт Малте Кауб и ви пожелавам приятно слушане. You could start now, Malte. Let's go.
Fantastic. Thank you very much for the introduction, and apologies for not understanding everything that you said. Just to reintroduce myself, and apologies for not being able to speak Bulgarian very well. My name is Malte Kaup, and as has been correctly pointed out, I'm based here in London. Actually, when I look out of window here directly next to the London Tower Bridge and very close to the ActivTrades office here in London, I'm privileged to do this kind of webinars for ActivTrades for a number of years now, primarily internationally, but also in countries like Germany, Austria, and Switzerland. And it is a great opportunity to discuss important topics with traders who trade with ActivTrades. If you have any questions, feel free to use the chat functionality in Adobe. This is the platform we use to share my screen. If I'm too fast, please slow me down. It's great that we have also some colleagues from ActivTrades in Bulgaria on the line. So if you prefer to ask your question or type your question in your language, feel free to do so, and I will then call on my colleagues to kindly translate the questions for me, because most important for the next 58 minutes or so is to make sure that you get something out of this session and that I can give you a perspective on what is the Brexit directly here from London. Just before we go into the topic, the risk disclaimer, and maybe it has already been kind of explained in Bulgarian. Everything we discuss today, please see that for educational purposes only. I cannot make trading recommendations in the sense that I can take responsibility for your trades. So at the end of the day, you are responsible for your trades, and ActivTrades and the Traders Leadership Council or myself. We are not financial advisors in a way where we say you have to enter into a trade here or exit there, and there's a guaranteed return. Quite the opposite. Trading CFDs, contracts for difference, carries a high level of risk. And if you are uncomfortable with that or have any questions about that, please don't hesitate to reach out to the very knowledgeable colleagues at ActivTrades in Bulgaria. However, I always try to be very clear and very explicit in kind of what I'm seeing in the market, and I will promise you that after we go through some kind of more surrounding macroeconomic matters that are important to understand the Brexit scenario from the UK perspective, I will promise you that in the end we have a number of very clear charts with very clear levels that we can have a look at. Okay, so let's go straight in the topic. Just one technical remark. I've realized in the past that this presentation platform has a tendency sometimes to freeze. If at any point what I say makes no sense in relation to what you see on the screen, please do let me know. What typically helps is that I quickly log off and log on again, and then everything can continue. So if there are any problems along these lines, please let me know. And typically, if you have any audio problems, I have a very professional equipment here. It typically helps to switch off other applications and make sure that kind of your computer can focus on Adobe Connect to transmit or receive the webinar signal. So with all that said, let's go straight into the topic, and it would be interesting to see if you know the individuals I will talk about. And I suppose the first person question in the room would be, do you know him? Do you know the name of this individual? And I'm pretty sure that a lot of people who have signed up to this webinar will know this person. He's the Prime Minister of United Kingdom from the Conservative Party, and his name is David Cameron. And David Cameron is very important to the whole Brexit scenario, because there was a lot of pressure put on him to put the referendum onto the agenda on the 23rd for the 23rd of June, which is next month, so almost like 1 month ahead of the referendum. And there's still a lot of nervousness in the market in which direction kind of the British public will decide to steer the country, either to be an integral part of European Union or to be completely independent. And we will also talk about very clearly what the implications, especially of a Brexit, we see or we anticipate on the markets moving forward. To understand his position as Prime Minister, he had to kind of bow down to the pressure, and he said, yes, okay, we do have a referendum where the people can decide, yes, we want to stay in, or no, we want to leave. His personal opinion and the majority in his party support the view that Britain should stay within the European Union, that Britain is stronger as part of a European Union if they have a seat at the table, and it will end up in a weaker position if they would go through a Brexit. Unfortunately, that is not the opinion of everybody, even in his own party, right? Normally in parties there's a lot of discipline, that the leader of a party says something, we go into one direction, and then the rest of the party has to follow if they like or not. In this case, a lot of politicians in Britain are very rebellious and try to oppose that view, and that's the so-called Leave campaign. It's a campaign where they vote very strongly and articulate very strongly the view to leave the European Union. And I show you maybe a face you're not that familiar with. The gentleman I've highlighted here with a rather funny face is somebody by the name of Boris Johnson. So you may have heard of him. Until very recently, he has been the mayor of our city here, London. And as the mayor for London, he was known to be quite outspoken, has quite different views on things compared to the Prime Minister. And he's the leader of the so-called Leave campaign. So that's the important part of the first two slides. But even in David Cameron's own party, there is a clear dividing line, and there is a strong movement against staying in the European Union, which is being led by a very popular politician who likes to be seen a bit as a funny guy. That is also the reason why he looks a bit crazy on this picture. He's definitely not crazy. But in a way, he's dangerous because a lot of people believe in what he says, and he very clearly supports the idea of leaving the European Union. So he's against staying in the European Union. And something the markets will be very sensitive to when you look at the British pound or the FTSE, the index, the stock index in the UK, also in Germany or in other countries, will be very sensitive. The more division you see in the Conservative Party, the more uncertainty we have and the more volatility you will see in the markets. But again, as I promised, in the end, we will look at a number of charts to give you a very clear understanding of where I see kind of the Brexit scenario play out in terms of levels and what the pound will do versus the Europe and the stock market in the UK. So these are the two people from the Conservative Party. And if I know no questions at this point, let me move forward to another funny character. I'm pretty confident that you have not seen him before. His name is Nigel Farage. Nigel Farage is a member of Parliament in Brussels for the United Kingdom. He kind of runs his own small party, which is called UKIP, UK Independence. That's what the abbreviation stands for. And he's very clearly also against staying in the European Union, and his views as such are very popular with mainstream people here in the United Kingdom. You would be surprised how many people actually support the idea that leaving the European Union would be a good choice for Britain. And in a way, what is funny about him is he himself is married to a German woman. So basically, if European Union would leave, if Britain would leave the European Union, even his own wife could possibly be asked to leave the country, which is an interesting scenario. However, you would probably not hear a lot of him in the campaign. He used to be more important to get all this set up. But right now, on the leave side, the person you kind of want to listen most to is Mr. Johnson. Boris Johnson gets heard by the people that can have a quite dangerous impact on the UK and its potential to leave, to stay in the European Union. And the final person, and then the kind of show of faces is already over. The final person I want to introduce to you is this gentleman. Again, would be very surprised if you've seen him before. His name is Jeremy Corbyn, and Jeremy Corbyn is the head of the so-called Labour Party here in the UK, and for a very long time it was unclear which view he would support because he represents probably by now the largest community in the UK. And finally, although he's not a great friend of the European Union, on balance, he agreed to support the fact that we, as United Kingdom, should stay within the European Union. So there's a bit of an interesting mix, as you see some more kind of extraordinary, funny characters, and the Brits like that. The Brits themselves are a bit kind of edgy and crazy along these lines, are supportive of leaving the European Union, and the more mainstream known faces of the parties are for staying within the European Union. Let me just pause for a second to see if anybody is typing any questions. That does not seem to be the case. Okay, so let's then continue. Again, if you have any questions, please feel free to type them in whatever language you prefer. So let's now have a look, and that's where it gets really interesting. Let's now have a look at what the people in Britain, what the people in UK actually say about staying in the European Union or leaving the European Union. So we looked at all the polls or the questions that have been asked to the people who live in Britain, in England, Scotland, Northern Ireland and Wales, to get a sense if they are more prone to stay in the European Union or if leaving the European Union is a factor. And I've in a moment I will also talk about the views of the leading hedge funds here in London and the leading investment banks. But what I find is a bit dangerous is that everybody seems to be quite relaxed about the possibility of the UK leaving the European Union. That in itself, for you as a trader, can create a really strong opportunity, because if in the end the UK decides surprisingly to leave the European Union, you will see massive shifts in the market, and we can benefit as traders. We can benefit from that heightened volatility, but more about that in a second. So let me now give you the answer to the question that I asked here, looking at all the polls, the questions that have been asked to people in Britain, and accumulate the answers recently. So the answer to that actually is, and it was a little bit different a short while ago. That's why I say 55-45. So we have, on balance, we have a slight majority of UK people who are in favor of UK staying in the European Union. And we have a slight minority of people in the UK who would consider the UK leaving the European Union. However, as you can quite clearly see here in the middle, this undecided segment in the middle, 15%, that very clearly indicates that there are a lot of people who have not really ultimately made their mind up and wait until the 23rd of June until they actually cast their vote to make a decision about staying or leaving the European Union. So the point I try to get across here is that while there is a sense everywhere that nothing is going to happen, there is still a large probability that people, undecided people, will actually swing in favor to leave the European Union, and that could actually go the other way. Just as another example, I don't know if you followed what happened in Austria in the last couple of days. There was also a vote for a high high political job in Austria, and the person who was not expected to win it just won it by a margin by just looking at the votes that had been submitted in the end by letters. And something like that could actually happen in the UK as well. So it's much closer than we think, and it's by no means a done deal, so to say, that Britain will stay in the European Union. It's more a bit of a kind of a false level of security what I'm seeing in the market. So be cautious. And what we want to discuss today is, what if the unbelievable scenario happens? And what if United Kingdom decides to go down the so-called Brexit route, which is nothing else than Britain leaving the UK and heading for the exit? The opposite would be the Remain scenario, where Britain would remain within the European Union. So what if Britain decides to leave the European Union? What would happen in the market short term? What would happen in the market long term? And what would very explicitly happen to the equity markets and the British pound? And that's what we will discuss for the remainder of this webinar. Let me just check if anybody posted any questions. So it looks like everybody is happy, and I hopefully not too fantastic. Thank you, Milan. I hope my pace is okay. I'm not too fast. I'm not too slow. Take silence as a positive sign here. Thank you very much. Okay, so first the facts. Brilliant. First the facts. Brexit scenario. June 23rd, 10 p.m. So very clearly what will happen is, on the June 23rd, the votes will be casted and the counting will start at 10 p.m. in the evening. In fact, I will run a webinar at that time if you are interested. It's very late in Bulgaria, obviously. It's midnight Bulgarian time. I will run a webinar for 2 hours together with another trader, and we will discuss the dealings of kind of what's happening right after the Brexit. By the way, if you want to sign up to that, you would need to go to the UK website of ActivTrades, which is activetrades.co.uk, or just change the language from Bulgarian to English, and then you will see the same structure and you could sign up. All the colleagues from ActivTrades are surely happy to sign you up to that webinar if you are interested on participating a longer webinar where we look in detail at what is happening in real time. So on June the 23rd, the votes will be casted, and the votes will start to be counted at 10 o'clock in the evening. And I expect a lot of volatility there, because it will take some time. The closer the votes are to each other, the longer it will take time to count every single vote until we have clarity around Brexit or no Brexit. So this is going to be a very interesting event for short-term traders, because the markets will for sure provide a lot of volatility and shift quite quickly. So note that time in the calendar. You don't have to be awake and live trading. You can also position trades in the system if that's something, if you still want to benefit from it. Just one word of caution. In an unprecedented event like this, make sure you do two things: reduce your position size and widen your stops, because we don't know what's going to happen. Maybe not a lot going to happen, but more likely we will get a lot of volatility in an outsized scenario. Brexit is not happening every day. It's happening like every 25 years or so. We have a Brexit vote. So expect a lot of volatility. And the way you reflect that in your trading is that you decrease your position size and you increase the stops that you are being using. Okay, so considering a Brexit scenario now, and as traders, we always have to think about the next thing, right? if a Brexit becomes a realistic scenario, you have to immediately think about what's next, what will be important. And this is not just kind of something I came up with. So I've discussed this with the leading investment bankers and the analysts. And this is a consensus view, what I'm sharing with you, that is being discussed here, also with kind of people from the major banks and hedge funds here in London. Two questions seem to pop out, and I will repeat them quite a few times also over the next slides to make sure that we get this point across. After we get the possibility of a Brexit, two questions will be most important. One, what kind of negotiations will follow after the Brexit scenario between the European Union and the UK? And we will look at the two extremes in a moment, and I will leave you with very clear scenarios that follow from the possibilities that can be raised from these questions. And secondly, will we see further EU integration or the opposite? These will be the two main questions that everybody will be asking if we get to a Brexit scenario. Because although a Brexit scenario will have a very strong impact on the markets, you still want to know what kind of impact are we getting on the markets. And I want to make it very clear what the hypothetical scenarios are that I'm looking at, but a lot of leading investment bankers are also looking at. And this is the main chart for the scenario. So if you want to make a screenshot at this point, very happy to do that. This webinar is also being recorded. Obviously, you can also look at it again. But if there's one slide in here that is not a chart that you want to take a screenshot of, I encourage you that this would be the slide. So what have I done here? What am I showing you? You maybe heard of scenario planning. So whenever companies, hedge funds enter into unknown territory, and we always make, in trading, we make decisions with limited amount of information and a lot of uncertainty, you start doing something like scenario planning. And you just try to figure out two things. One, what are the key questions that drive, what are the driving forces that drive the scenarios? And B, how will the market then react if these different scenarios come to life? And I will with a good pace, but very diligently go through that to make sure that I get this point across. So the two driving forces are, number one, here on this vertical axis. And you can see I've written on the top integration EU, and I've written on the bottom split up EU. So these are the two possible extremes. So after we have a Brexit, what could happen is that we have a cataclysmic effect, like a domino effect on the European Union. And suddenly Spain starts to drop off. Suddenly Italy starts to drop off. Portugal starts to drop off. Greece maybe much earlier. And then the whole European Union maybe becomes untenable as such. Or it is just a combination of one strong country and a lot of weak countries. Then the whole European experiment will not work anymore, and it will end up in a split up. So that's what we have on the bottom here of this chart. On the top, one possibility would also that you say, look, after the UK has left the European Union, this annoying little child being the United Kingdom that always annoyed us and disturbed the European Union is gone, and actually that could lead to further integration. So you need to look at these extremes to come up with scenarios that help you in the market. So that's one dimension. And the other one on this horizontal axis is, oops, sorry, move forward, we are back again, is the question, do we get an unfriendly or a friendly Brexit? So this is what I meant with the upcoming negotiations after a Brexit scenario. So what does that mean? In very clear terms, a friendly Brexit would be that Germany, France, other countries would just line up, sit down with the UK, and agree on very favorable terms to do trade with each other. And typically questions that would include like, what do you do with all the Germans, with the French, and from other countries? What do you do with all the Europeans who live in the in the UK and are maybe not British citizens? And maybe you come to a conclusion in a friendly Brexit scenario that actually nothing changes. And on the other end, we have this unfriendly Brexit. And imagine a scenario where suddenly Britain says, no, we don't like to keep people from Greece. We don't like to keep people from Eastern Europe. We don't like to keep people from could go all the way up to Germany, right? And I'm being a German, I would maybe also be kicked out. You can imagine that that would have massive consequences on the market. That would lead to what we call a brain drain. A lot of kind of clever people leaving the country would be a really bad thing for United Kingdom. And maybe other countries don't want to negotiate favorable terms with United Kingdom, like France, because they may be really upset about them leaving the European Union. So these are the driving forces, just to make it clear to you how I came up with these scenarios. Okay, now after we've defined the two driving forces and the 4 dimensions, we look at, after the potential Brexit has happened, what would happen with the market short term and long term. Let's start on the top right with the 2 green kind of lines in the box. So top right is a scenario where the fact that UK is leaving the European Union helps the EU to further integration. And secondly, everybody's actually quite friendly and we have good negotiations with the UK coming on. So that would be a very interesting scenario where, although we see a Brexit from United Kingdom, on the short term, the market would probably see that as a good signal that actually Europe is getting stronger and the market is working well, the single market. And also on a long-term basis, even more so on a long-term basis, I think Europe would look like a very, very strong example of an economy that gets it right and even allows a certain economy to kind of step out of the European Union without disintegrating. So short and long term, we would see this as a strong positive for the markets. If you think about a percentage, how probable is this kind of scenario? I have to be honest, quite unlikely that UK leaves the European Union and we get to this very positive scenario. Let's now have a look at the top left scenario, where we say we see further integration in the EU after Brexit, but it's going to be really unfriendly. So that's what's here on the top left. Short term, the fact that it's really unfriendly will lead to market weakness. And when I say market weakness, a very quick devaluation of the pound. Again, fantastic for you as a trader if you want to trade that volatility, especially against the euro. And I have some charts in the end that very clearly show you where we are in this process. But secondly, on a longer term basis, more than 2 years, we would expect that strength would come back to the market as markets adapt very quickly to what many call the new normal. So what do I mean with that? Let's look at unemployment rates in the United States. Let's look at how much money has been printed in the last couple of years. Let's look at interest rates. And if somebody would have told you that we have 0% interest rates or negative interest rates around the globe right now, that we are printing money like crazy, if I would have told you that 10 years ago, you would have come back to me and said like that's nothing that the markets can survive. But still, the markets can survive that, and the central banks have not run out of bullets to support these markets. Just a little keyword here is helicopter money. That's something that is still possible. But let's not go into too much technicalities here. The point I try to get across with this top left scenario is that the market will adapt to a new reality much quicker than you think if the European Union as a concept still looks like a promising one. All right, and now let's look at the bottom scenarios, and they're probably the more likely ones if we get a Brexit. So bottom 2 scenarios. On the bottom right, what if we get a fairly friendly negotiation after a Brexit, but clearly there's a lot of pressure on the European Union. It looks like we're going to split up at some point. Well, first, not surprisingly, maybe for you, our judgment would be that the markets would react fairly neutral in terms of absolute numbers. However, the markets would provide a lot of volatilities. When you think about trading strategies, this would be exactly the kind of market environment where I start deploying a range trading strategy, if that is a scenario, in the medium term, 1 to 2 years, or short term. And then medium to long term, I expect the equity markets to be under pressure, but especially the British pound to be under a lot of pressure. And now probably the scenario everybody is thinking about when they're thinking about the Brexit, the top left, the bottom left scenario. What if we get a really unfriendly Brexit? It's getting really ugly between the UK and the European Union. There's a lot of fighting and kicking and screaming going on. And on top of that, the European Union splitting up. Greece is going to become a problem again. Maybe Spain, Portugal, and other countries just say, I want to leave this European Union, and just use the UK as a blueprint, as an example, to do the same. So this would be a disaster for the market here in the UK, but also more widely in the European Union, and also on a global level, which would possibly lead to short-term market weakness and medium to long-term market weakness. Nicola, if you have a question, just type it in. I see you kind of raised your hand. There's no need to kind of wait for my approval. I'm absolutely happy to just take and accept a question as it appears. So the point here for you as a CFD trader is each of these scenarios provides you with good opportunities. But what I want to give you is a bit of a underlying direction from a macroeconomic level to kind of support you. If you, for example, on the top right scenario where we think everything is going to be quite positive, you will maybe want to think about getting into a trend trade. But in the bottom right scenario where we are in the short term a bit more market neutral, you don't want to waste your time on trend following strategies. A range strategy is maybe the better option for you. Okay. Good question from Belisa. Question was, just read it out for everybody. There will be one vote. And he's given himself the correct answer. So there will be one vote you can give is either stay in the European Union or leave the European Union. There's nothing in between. And just in terms of who is allowed to vote, it's maybe quite interesting. Only primarily the British people who live in the United Kingdom are allowed to vote. The British people who live outside of the United Kingdom are not allowed to vote, which is quite interesting, and one can have different views about that. Also, people like myself, I'm a German who lives in the UK now for about 15 years here in London. I'm not allowed to vote until I get my citizenship. So there's a lot of, especially in London, there are a lot of people in probably also well-paid jobs who are not allowed to vote. Yeah, Nick, we'll land on the charts in a moment. Just kind of a few more points, and then we go over to charts. Just to kind of redefine the time frame when I say positive scenario. 1 to 2 years of uncertainty means a lot of volatility, followed by what could happen as a new normal. And then the other dimension I discussed was the Brexit, more integration or split. Basically, the idea is the more we go towards split, the more expensive it will be. More good questions. Could this vote be manipulated? I can vouch for that because we just had a vote here for. We had a vote here for mayor, and there have been some problems with the counting of the votes, but truly technical problems. In the end, they found the votes, but it has been very well supervised here, and it is not possible, or very, very unlikely, that somebody would trick the vote or manipulate the vote. That is something that is very, very unlikely. Is there other people who push Brexit? Yes, there are a lot of people here actually who push Brexit. So one, I mentioned the kind of Conservative Party, people who split off in a way that they want to support the Brexit. There was a former minister, Ian Duncan Smith. He's supporting the Brexit. there are a lot of businesses here, especially the businesses that are more local, who support the Brexit. But then you shouldn't forget, then on the flip side, we have a lot of companies like BMW here. We have other international companies here who would reconsider staying in the United Kingdom if there is a vote actually pro-Brexit. So I think a lot of local, smaller businesses probably support more the Brexit idea. The theme from the larger businesses is that we should stay within the European Union. Let me just see. What is your personal opinion on Brexit? Results from the vote. Thanks in advance. High level. Thanks. Yeah. My personal view is that I think right now we are finding ourselves in a false sense of security, because we think nothing is going to happen, right? But when you look at the numbers we clearly get from the asking the people, is that it's much closer than we think. So I think it's very relaxed right now. The media tries to support more of a view that we should stay within the European Union. When you look at the newspapers and we look at what kind of the main TV stations say, although they try to be independent, but I think it's more tilted towards staying in the European Union. But don't underestimate British people. I think they like to have their own opinion, and I wouldn't be surprised if more people vote for the leave the EU than we would think. So I think it's going to get very, very close. That's my personal opinion. Okay, so I promised you charts. It will be a people vote. Let's see. The power is with the people, and at the end of the day, what will happen is that people will also think about their children, and that's a lot of the stories is made around fear. You know, what if we leave? Then this will happen. We'll lose a lot of money. We lose a lot of funding. We will lose our seat at the European Union. That's what the Stay campaign is latching onto. And fear is normally a good motivator to get somebody to vote in a certain direction. But I wouldn't underestimate the Brits and their willingness to vote differently. Look at what we have here in Britain. We have our own currency. We have a British pound. We still drive on the left-hand side of the road. Okay, a lot of other countries do that as well, but in Europe, not that many. And in other sentences, I don't know if you cases, I don't know how often you've been to Britain or London. A lot here is very, very different and very, very pseudo-traditional. So a lot of people still like to believe that we have an empire here, but that's a bit more like with tongue-in-cheek, a funny remark here. Let's go to the charts, and I've the FTSE for you, and I have a number of Euro GBP charts, which I think are the most interesting ones. So the FTSE right now, what's happening here is that just in the last couple of days, guys, the feeling of a sentiment has shifted towards the belief that there will be no Brexit. To be quite honest, there is this sentiment in the market that the Brexit scenario is a bit less likely than it was a week ago. This can shift within a matter of days. One comment of Boris Johnson or David Cameron can change that. But right now, there's a bit of a shift in the direction that we will more likely stay within the European Union. And just yesterday, we have seen the biggest influx of money into the British pound that we've seen for the last 3 years. So I looked at flow analysis. Yesterday was the biggest inflow day for British pound for the last 3 years. Why that? And how we are seeing what are we seeing as a result? Well, why? I answered that. Many models are now slightly optimistic. This is not the end game, right? But many models are a bit more optimistic about the Brexit scenario. And suddenly we see a lot of money coming into the British pound. Why? Because they buy British stocks. Because they think the companies in Britain are slightly undervalued. And when you look at, for example, the S&P 500, very close to all-time highs level, very close to the 2,100 level, the US dollar being very expensive. So if you're a hedge fund manager and you have to allocate your money around the globe, right now there's actually a good opportunity to see if you can get a trade going in British denominated stocks, because if you think about trading in your local currency, right, and you buy real stocks here, you get kind of a double effect. One is if the stock goes up, you get that performance, and B, if the pound goes up versus the currency you trade in, you get the double trade here as well, the double effect here as well. Okay, thanks for your comments. It's always much more fun when you guys participate, and I'm not just kind of talking into a microphone, and I really appreciate that. So what have I put out? Also put out a note on a website, actually on that is related to ActivTrades the other day, where I said, like, look, right now. And again, I can't give you investment recommendations, but I can be very clear about what I'm seeing. Right now, we're pushing against this Fibonacci, which is a confluence of that descending trend line and the 50 and the 61.8 Fibonacci. But the fact right now, ahead of the Brexit vote, that we are now seeing this influx in pound is really giving me a reason to believe that we can blast through these key levels. Normally, a level is not just broken like that, and the market will kind of test and bounce back and go up. But I see a possibility, again, I can't give you investment recommendations, but I see a possibility that the FTSE can blast through these 6,250 levels and attack the triangle, the trend line that I've drawn here, and also the 61.8 level, which would catapult us to a level which would eventually go closer to the 6,800 level. According to market analysis and market dynamic, we first have to break the key levels to see if we can do that. So according to market analysis, obviously we would expect some resistance, and I've highlighted in these bluish levels. I highlighted levels that I would see if we indeed see a Brexit scenario, right? So if we see a Brexit scenario, I think we could go down and test below 6,000. I think we could go down and test the key level at 5,444. And you see also the lower level closer to the 5,000 mark. So that would be something the market would, in a Brexit scenario, with a good possibility, very quickly reverse and test these lower levels and really nicely play out the Fibonacci that we're looking at right now. So very, very short term, what I see on a daily and on a like this week's level is pressure to the upside, and I would be cautious and not just go against that. So I expect there's a little bit more room for the FTSE 100 to the upside. If we trigger a Brexit scenario on June 23rd, I'm very clear with kind of from a market dynamic point of view, the lower levels that we could hit. So it's a typical pullback and push movement that we see in the market. Yeah, we work together. Good point. So that is my view on the FTSE. Let's spend at least the same amount of time, maybe a little bit more time on the latest charts here. And I just, before we start the webinar, I copied them into this presentation. So you get the latest pictures here. I'm really in love with this chart. I think it's a fantastic one. I'm sorry, I left a little bit of German on the chart, but it's about Brexit targets that I've drawn here on this chart. So what am I seeing here? So we see this is a monthly chart of Euro GBP, the Euro pound. And what we've seen when you look at the left, what happened in the past is after the credit crisis in 2008, we saw a massive devaluation of the British pound, which got almost close to what we call parity. Parity is when the euro is exactly the same value as when one British pound, 1-to-1. We got scaringly low to this, and I really was annoyed because somebody who kind of earns his money in British pound, you suffer a lot if you try to purchase something outside of the UK. So that was what happened after 2008, and since then, kind of the UK economy has adjusted and has improved. And why are we so hit by such movements on the financial market? Well, if you go to Britain, you basically will find two companies or two industries. One is financial services, number one, and the second one is some mining companies, and the rest is probably almost negligible, maybe a little bit of retail industry. But that's what Britain is these days, right? And if the financial services industry is being hit, then the market really feels that in a very strong way. That's why we got this huge devaluation after 2008. And just to look where we are right now, so we approached just recently, lifting up from the 0.7 level, we approached the 0.8 level and broke slightly above it. 0.8150-ish was the kind of the high, and it was quite clear that that is a key resistance area. As you see, it's a combination of that yellow trend line that I've drawn, and also that that I've drawn that goes from the lower highs from 2008, and also this horizontal support and resistance line, the yellow, that I've drawn there. So very, very strong resistance, which is in confluence with many other Fibonacci axes, and it was quite clear that the Euro GBP will most unlikely break through this area just in one go. I'm not saying that this is over, right? But the market now is looking a little bit less at the Brexit scenario than it was doing that a couple of days ago, and immediately the market reacts with a very strong movement away from the 0.8 level down to 0.7580. That was probably like an hour ago when I copied this chart into the presentation. However, and I will have a look at the questions in a moment. However, yes, this is euro pound, right? However, if we get to a Brexit scenario, I expect this whole trend line, all the trend lines that I've drawn, I expect them all to break very, very quickly. So if we get into a scenario, and you remember the 4 scenarios that we've drawn, if we get to a scenario which is like short-term negative for the pound and medium to long-term maybe positive, maybe we only get as far as the 0.84, which I've drawn with this blue line. However, if we get to this really bad horror scenario, unfriendly Brexit, and pressure on the European Union to a point where the whole thing can possibly explode, I think there is a possibility that that we can go all the way up and test parity. Could even go higher than we've been in 2008. And as you've seen from what happened in 2008, that didn't take a lot of time. This is a monthly chart, and if you look at the last monthly bar that brought us all the way up to almost parity, you can expect that if we press above these highs, 0.84, 0.85, this move would just be like a train, and it would be very, very dangerous move and could easily go in a region of parity. If we can avoid a Brexit, I think the opposite will happen. I think if we can avoid a Brexit, we will continue to stay in this scenario, and the British pound will probably appreciate quite a lot, get stronger, and we can see the 0.7 level again. It could also go lower to test the kind of the previous lows that we've seen. So be very, very clear on that. So let me now have a look at the comments, because you've been kind and you added comments. 0.74, so 50. I will buy hardly. I see this zone. Your GBP. This is the FIBO parallel, the last one. Malte, you with any broker? Well, obviously, I'm very loyal to ActivTrades. They provide a really good breadth of CFDs and that you can trade, and primarily it's FX. So I'm mostly at home with FX, but also I like indices that I'm trading, and obviously they're all available in through ActivTrades. By the way, a lot of people are also looking at gold as a hedging mechanism. So what you see right now when you look at the gold chart is that actually that gold has lost a little bit of value. So we're coming away from these 1300 levels, closer to the 1200 levels again. A lot of people, if we get to a Brexit scenario, will probably hit it hard on the long side with gold, and will want to expect to see higher levels above the 1300, the 1350 market again. So that's the bigger picture. Oh, let's see. What did Milan write? Is there any chance to speculate with a GBP like 1992 Black Wednesday? Possibly, yeah, possibly. Well, look again. If we get this Brexit scenario and things, and the market right now, as the market is now pricing in a scenario that is the so-called Remain scenario, Remain in the sense of we don't get a Brexit, and the market is wrong-footed, this thing will just be all over the place. And the most likely, nobody knows exactly what's going to happen, right? And the most likely scenario is that this will go wildly to the upside, like we've seen on this chart. The only comparison month bar would be in 2008. That's a good point. Let me just flip over to the slide that is a little bit more granular, also on Euro GBP. Just 1 second, and then I will comment on Vasilian's really good point. Yeah, 1 second. What's happening? Here we go. So so just to give you context, what is this? Is again, it's Euro GBP. Now it's a daily chart, and we maybe as if we also, I think there's some comments about entries and levels more on a daily basis. So we'll talk about that in a second. So yeah, technical analysis will win. It always does. In both scenarios, the markets will open with a lot of gaps in next day. What do you think? Look, what did we say? The 23rd of June is a weekday, right? So in the currency market, all the movements will be all the movements will be incorporated as soon as we know what's going to happen, Brexit or not Brexit. The market will find direction very quickly. If we know very quickly after, on the June of 23rd in the evening, let's say at midnight, we know Brexit, yes or no, you're right. The markets that are closed at that time, they will open with huge gaps, and that's where you have to be a bit careful, because I think even the Euro GBP or other markets that are still open at that time will probably create quick gaps. Gaps typically have a tendency to close, but if you just think about the 4 scenarios that I've shared with you a little bit earlier, if the market is being hit completely on the wrong foot and the gaps are very big, I don't think that gaps will close very quickly. If the market is just surprised, kind of, then the gaps will close very quickly, and a lot of people will think about trading in a way that the gaps will be closed. So gap trading strategies will be sought after, will be quite used by a lot of people. And just remember one thing: gaps tend to close at some point. What I like, just as a side comment, I like to look every Sunday. I look at the euro US dollar. Does it produce a gap which is like 20, 30, 50 pips wide? Yes, if that's the case, it's not 100 pips and it's not just 5 pips. Is it somewhere in the middle? You will see that these gaps have a tendency to close very, very often. Have a look at that. And I know a lot of people just trade the Sunday gap in the euro US dollar. Again, can't make trading recommendations, but I try to be very explicit, as explicit as I can here. So what do we have here now? And when I come back to when I will have a look at your comments. So this is the daily chart. So what have I done? I've drawn a few things here. So from the last move up, I've drawn a Fibonacci quite clearly, right? And the Fibonacci levels, hopefully are not too small. I think there's a little button where you can click on full screen if you want to see more. But just to let you know what it is. So first pullback is 50%, 50. The second pullback is 61.8%. And the third one, where you see these 2 lines very close to each other, is 78.6 or 80%. It's pretty much the same for me. So typically, the way I like to look at that is that in Fibonacci, you think about following in the direction of the trend. And this trend on this page, on this daily chart, very clearly is bullish, isn't it? So the market now nicely retraces into this area, 50%, 61%. As long as the market holds and doesn't break the 80%, my expectation here would be that we jump up again and we reach new higher highs. But you want to be careful, because we're now seeing some really bearish signs, that you don't act too quickly. So in a way, I'm with some comments I think I've seen. Don't just jump on this bullish, which would be that would be very foolish. Because what you also see is the market has formed a head and shoulder pattern here. So you see the blue box in the middle is the head, and the 2 other boxes are the shoulders. And we also broken a very simple trend line to the downside. So very bearish signal. So my next target here is the 50% on the bearish side. And if we break this, the next target would be the 61.8. Until then I would expect some buyers to come back into the market to see if we can lift this picture up again back into the higher area. So I think what I like about the technical analysis, and I get the impression you do too here in the room, is it gives us very objective clarity around the key levels that are relevant. And I can't be any clearer in terms of sharing with you what the key levels are that I'm looking at. Especially the 61.8 is interesting, because if you look to the left, that has been a previous resistance, the 61.8 area. These areas that have been worked as previous resistance are normally very strong support levels if the market comes there from the other side to the down. So I keep my eyes very, very closely to these levels, and and if we break these levels to the downside, always kind of the next step to the downside will open. Again, I can't make explicit trading recommendations, but I want to be as explicit as possible in terms of what I see in terms of market dynamic. It's your responsibility then to create a trading strategy around that. Sorry, that's taking a win. Yes, this is for sure. After the vote, if you pull FIBO from 0.7, the head is on the 61.8 FIBO. Which are those near levels? I can't see. The levels here. Let me just go to the MetaTrader platform. Probably can see it a bit more clearly here and zoom in. So this is now live data that you're seeing. So the 50% is the 0.7548. The 61.8% is the 0.7414, and the 80% is the 0.72. Right. Again, if you go back to the recording and just take it, or now if you want, just on your keyboard, you can probably print screen and copy it in Word or in an open source document. You have these levels. Again, I can't guarantee that the market will move from these levels as we would like to in a quick line, because it normally never does. But I can give you a very clear insight into how I come up with these levels and kind of what is my thinking that goes into it. Let's just have a final look at the FTSE. See, it is still pumping against still pumping against with 6,251. So I think there is a hypothesis that there could be a bit more upside. You use the 80%. I think what we do in trading often is we try not to get the last pip out of the move, right? So I don't try to get the whole move. I try to get 75% of a move, and the 80%. If we get a close on this 80% level, which for me is especially on a daily basis, this is when my hypothesis would be invalidated. Where so like the market has not done what I want. So if we get a close at behind the 78.6 and the 80% is just a very good line for me to articulate that, or to remind myself that is the case. So if we get below that, I will not look for bullish moves anymore, and I will seek to draw a new Fibonacci. That's why I have the 80% there as well. Okay, looking at time, I think okay, fantastic. Looking at time, just a couple of thoughts. Just in summary, I hope I prepared you for some very clear scenarios that could happen if we get the Brexit. Right now, everybody is a bit too calm, I think. I think it's more possible than we think. If a Brexit scenario happens, I try to be very clear with my technical analysis as to what could potentially happen. Just one comment. If you like what we've discussed tonight, feel free to give the ladies and gentlemen from ValueTrade some feedback. Very happy to come on every now and then and share a perspective on a topic that is hopefully relevant for you from London. Secondly, I will come to Bulgaria in September, so please keep an eye on the website. I just the dates escape me, but we are going to the two major cities in Bulgaria, and I'm sure that the colleagues from ActivTrades will put something on the website. So it would be very, very nice to see you in person. So I look forward to a trip after we got the Brexit vote in September and have an opportunity to talk to you guys in person, which is always appreciated. I've been to Sofia before at a conference, and I was very, very impressed with the level of knowledge and interest there. So I'm looking forward to coming back again. Okay, fantastic. So thank you very much for your time. Thank you for your kind comments. I really like Bulgaria. I have a lot of good friends there, and also a big friend of good wine. And I know that Bulgarian wine is fantastic. So see you there for a chat, a good glass of wine, maybe at the conference, and trade safe. Thank you.
Thank you very much. It was very, very interesting, and I would like to thank you, Malte, for this presentation. I hope that it was very interesting also for all the participants. Thank you and have a nice evening.